All right, gang. Good day. Welcome back to the live room. Give me I'm getting the spinning wheel of death here in my actual setup. There we go. Volume should be on. Can you guys hear me and see me okay? Give me a yes. Of course, we'd spend the first day kind of being a little bit slow since we're not used to being in here, but welcome back. Welcome back. Welcome back. Two different crowds here. Of course, we have the normal live room crowd, tier 1 premium and trial members here in the live room. We also have a crowd for the live stream. We started doing this at the end of last year, where we're going to do a quick little live stream at the beginning of each day, just briefly going over the top trading idea of the day. Then we'll send you guys that are watching on TradingView or Facebook or YouTube or wherever, we'll send you guys out of here, and then we'll dig into the details here in the live room. Now, we're getting off to a very interesting week. We don't have any high impact fundamental news announcements coming out today, but this is the first week of a new month. And you know that means what is coming on Friday? What is coming on Friday? I'll give you a clue. It happens every first Friday, or most first Fridays, right? We've got the non-farm, right? So Orsi just said it's a boring week until the non-farm, right? It's non-farm payroll. This is historically a high impact news event. It doesn't have the same impact that it did back when I started trading in like 2007, 2009. Mainly that's because market conditions have changed and we're concerned about different things right now, but it still is a high impact news event. It still is one that you should avoid, in my opinion. Now, we don't have any news coming out today. Tomorrow we'll have the precursor. We'll talk about that in tomorrow's news briefing and whatever like that. But I want to give a warning because this is a very dangerous news event for this week. And we kind of talked about this in yesterday's Q&A session, right? So in yesterday's Q&A session, we talked about a trader who was, he did his back testing, he did his forward testing, he started off trading, he had 2 wins, and he took 4 losses in a row, and then he kind of freaked out, got not FOMO, but got a little bit of cold feet, stopped entering trades, and we had to go break down the trading plan and talk about psychology and all that fun stuff. This is a dangerous time of the year because at the beginning of a year, everyone is excited, right? Everyone has deleted all of the mistakes that they made a year ago. They have all these new goals, all these new ambitions, and they have this extra sense of excitement heading into the new year. It's very similar, if you guys can remember this, very similar to when you first started trading. Let me ask you this. When you guys first started trading, did you feel like this energy to like just get involved right away? You had all these new tricks, all these new toys, and you just want to kind of play with them like a kid on Christmas? Yeah. So we see the same thing across the board during the new year as well. And the reason it could be very dangerous is this, right? So we know that non-farms is going to come out. We know that it does have the potential to put in a pretty decent move, right? If you're a new reckless trader, not really doing anything, you're probably going to be trading it just because you want to be involved in the market, right? You don't want to be left out, and you're going to be one long or short, right? So you have a 50-50 chance of either being very happy or very disappointed with the news. It is a worse or a scarier situation for those who happen to be on the right side of the non-farms, because what do you think it's going to do? You come in, new year, new excitement, new goals, and then right away you hit big, right? What do you think that does to the confidence, to the ego? Do you think you're honest with yourself and you're like, "Ooh, man, I got lucky"? Or do you think like, "Man, I'm a trading god," right? You start thinking you're a trading god. You start over leveraging yourself because you can't be stopped. You want to make more money, and trading is so easy. And then you put yourself in a position market can take everything from you even quicker. And then, of course, after that, it leads to the whole system hopping. You find something new, or you revenge trade, and you try to make everything back by using an even bigger position size, and it just ends the wrong way. I spoke to a guy the other day who lost 30%. Now, luckily, he stopped himself, but off to a hot streak, and then he upped his position size, and he lost 30% right away, and he had a heart-to-heart, and now he wants to do things the right way. But most people won't take the chance to have that heart to heart, they'll kind of just go until the ship sinks. So you got to be careful with that. So just saying, be careful this week. Typically on a non-farm week, there isn't a lot of movement in the market because everyone is waiting until that announcement. So be very careful with kind of, controlling that urge to be involved, just because it's week one and you feel like you're not a real trader unless you're taking trades. And then my recommendation is stay out of the market on Friday. I don't think there's any reason to, unless it's in your trading plan, I don't think there's any reason to, especially as a short-term trader, to be involved with it. Raymond says it. What? Yeah, I'll tell you a quick story before we actually dig into the chart. We're going to look at, USDJPY for the trade of the day. But there was a period in time when I hit on the non-farms. I hit on the non-farms in a big way. And again, this was 2009-ish. So this is when the non-farms would give you like a 200 pip move on a regular basis. And I hit on the non-farms. And first, right, it was all me. It wasn't luck. It was skill. I was the man, right? And I developed a plan in my head that from that moment on, I was just going to trade a single day a week. My whole trading plan is like I would travel the world. I'd come this Friday. I'd hit on the non-farms, make my 200 pips or whatever, because 200 pips were fine for a month. My goal back then was to make, I think it was like, I don't know, like 20 pips a day or something like that. So if I hit 200 pips, once a month, I was fine with that. And then I go off vacationing and living a nomadic lifestyle. That plan lasted exactly 1 month because the next month I traded the non-farms with an over position and blew everything. So warning from personal experience. All right. So let's get started today. George had the same dream, right? It sounds so good in your head, right? You do the math in your head and it works out so well. Here's another one. I just did this the other day. I did a podcast yesterday, and I was talking about the power of compounding, kind of based off the conversation we had again in yesterday's Q&A session. And I was talking about making 1% a day. And the fact is, if you can make 1% a day, right? Look at how much or even 1% a week, how it seems like such a small number. But if you look at that, if you can consistently make 1% a week, and you look at that over the entire like a 3 or 4 year span, do the math, and I think you'll be very surprised at what you can do to your account. It is crazy. Now, no one wants to wait 3 or 4 years, but 1% a week, 1% return a week over 3 or 4, or let's say 4 years. Look at what that does to your account, and I think you're going to be quite surprised. And that's when people get a realistic view of like, wait, I don't have to make 20% a year. I don't have to be like that stupid commercial where it says we make 60% a month, right? So let's start with the dollar yen, and we're gonna talk about a new kind of, not tactic, it still falls under the IPDE, but a new kind of acronym I've been using that because I use it in a way with my pre-market checklist and how I look at the markets, and I wanted to put it together in a way that sounded kind of fun. But I want to do something called the B.L.A.S.T technique, right? When we do our top down analysis, B.L.A.S.T, the B.L.A.S.T technique, and that's going to stand for big trend, little trend, area of importance, setup, and tactic. I'll repeat that again, right? This is very similar if you have that pre-market checklist that we gave you to kind of how do we look at, big, major structure, minor structure, all that fun stuff. But B is big trend. L is little trend, right? So think macro, micro. A, area of importance. That's going to be support and resistance for me because that's my go-to. S is the setup. T is the tactic. So dollar yen, give me a second to cough here. Dollar yen, pound yen is doing something very similar, but this is one of the main trades on my radar today. And the first thing I want to do in my higher time frames, I want to ask myself, what is the big trend, right? What is big picture? What is happening in the market? And what would you guys say? What is happening in the market? Bullish, bearish, consolidation? What we got on the chart? Bigger picture consolidation. Again, this is all important, right? Because especially with the bigger trend, right? we want to make sure we're on the path of least resistance. I don't care if you're a counter trend trader or trend continuation trader, but if you know the bigger trend, it's going to help massively with especially target. So we are in consolidation, bigger picture, right? You zoom out your chart, you can see that we're clearly moving from left to right. If you want to be more specific with kind of rules that we put in for trend, you can look at the most recent new structure low here. There has not been a recent violation. It's been a recent hold. I'm sorry, I'm lagging a lot today. Apologies for that. Probably because my computer is not used to all the streaming stuff. It's been a few weeks, but we haven't violated that new structure low. We actually held, and now we're making our way back to the top of the range. So bigger trend is that we're in consolidation. Now, what would you say is the little trend, right? And little trend, you can either go down to a lower time frame, or if your eyes are prepared, you can look at kind of a recency bias. A little trend. What have we been doing? Bullish, bearish, consolidation. What would you guys say here? Right? Little trend would be bullish, right? You can see we clearly came to that previous level of support held, and now we've rallied back up past the intermediate level of structure here in the middle, and then coming towards a previous structure high right here. So big trend is in consolidation. Little trend is bullish. Next up is going to be areas of importance. Now, again, if you're going to use this type of thing, you make areas of importance, you make it yours. So we all have different things of importance. We talked about yesterday with Sam, right? Sam liked moving averages, right? Those were areas of importance for him. Some of you guys may like Fibonacci. Got a cameo visit. Hey, what's up, buddy? Can't be in here right now. I'm working, okay? I'll see you later. He just wants to trade, man. He heard non-farms and he said, wait a minute, I can get some toy money. Hold on, give me 1 second. So where we're at. Areas important. So for me, I'll use his account to trade the non-farms. There we go. Area importance for me is going to be levels of structure, right? So again, we just broke a key level of structure right here. We put in a higher high, higher close. We'll see that, or we're working on putting in a higher high, higher close. We'll see that when we zoom in. Another key area of importance, as Orsi mentioned, that 118 level, right? So if we look left, structure leaves clues. If you have your Ninja Trader charts up, right, there's a big VS1 level up here. These are areas of importance, right? So areas of importance are going to work just like my predictions when we go through the IPDE process, right? I look at support and resistance as being kind of like destinations on a map, right? I don't necessarily know when or how price is going to get there, but it gives me a pretty decent idea of where price action is likely to go next. So, right? So B, big trend, consolidation. L, little trend, bullish. A, areas of importance. We got our 118 level. Next is going to be our setup, right? So we can zoom in. And again, we can see that we recently had, and again, apologies for the lagging. We recently had a break above a previous new structure high, right? So it's not a break and close below or above, because we're on a daily chart here. You go down to a lower time frame, you will get that. But we know that we can, let's assume, right? Let's always try to stay one step ahead of the markets as far as our predictions go, right? Predictive in our analysis, reactive with our results. Let's assume that this is a higher high, higher close, right? A higher high, higher close allows us to make the prediction that what? Or what does it do first and foremost about that little trend? Does it confirm it or does it deny it? Right? It would confirm it. And again, we need to close here in the daily, but we're working on an assumption here, right? We don't just buy it right now because of that. You wait for the close. It confirms it. It also allows us to make the prediction that price is likely, if we're confirming a bullish trend, right? Price is more likely to continue higher or lower, bigger picture. You got to say bigger picture, because people will be like, well, you'll get a pullback, and people are like, I told you lower. Like, well, no, well, it has to go lower to go higher. So, right, it gets all confusing. So higher, right? So now here's where we put everything together, right? So if price action is likely to go higher, then where are we likely to go higher to? This is the dollar yen daily chart. I'm getting comments about my kid breaking in. You got me, guys. He's the one that really does the trading. I'm a fraud. I'm a fraud. If price action is likely to go higher, where we're likely to go higher too. Amari says 118. Yep. Remember that area of importance we just identified, right? Boom. That's why it's important, right? Because we have our destination. So 118. So we know that the opportunity or the setup, if we're following this B.L.A.S.T technique, which I hope to remember past today. Knowing me, I'll forget it. And tomorrow I'll come in with a different name. Be like, oh, the headbanger technique, right? We know that our opportunity, at least from right now, is from basically 116s to 118s, right? So what we did is we've isolated a zone. We know that, at least for this setup, we're looking long, and we're looking long from where current price action is at to that 118 level. Now, the last part of the B.L.A.S.T technique, B.L.A.S.T, big trend, little trend, area of importance, setup is our tactic. How are we going to approach this this setup? What is our tactic? Now, this is going to be determined by what type of trader you are. Everyone is different, right? We may have Chris that says, hey, I'm a breakout trader. So as soon as we get a higher high, higher close, I trade next bar market. We may get Cody who says, hey, I'm a pullback trader. If price action pulls back in the previous structure, then I look for blah, blah, blah to buy. We may get Orsi who trades flags and pennants, right? Hey, if we get a high and tight flag, then I'm looking for the breakout, right? So the tactic is going to be determined by what's in your trading plan. There's infinite amount of ways to do it. But the point is, you now know how to approach this trade from a continuation standpoint. Obviously, if we get to 18, you can flip it. So counter trend traders, you're just waiting to 118s and you're doing the opposite. But that is how I would approach this, right? So if you're new, right? And again, if you don't have that pre-market checklist, obviously you can make it whatever you want. Think about doing this B.L.A.S.T technique. It may be helpful. So literally writing down, you can change the words if you want. I like the word blast because I can do bang, pow. I can make noises and stuff. And I'm all about, making noises and stuff like that. But write it down. B.L.A.S.T, right? Figure out your big trend. Figure out your little trend. So your big trend is your higher time frame trend, your macro trend. Little trend is your micro trend. Identify your areas of importance. Again, for me, support and resistance, supply, demand, but could be anything for you. Think about your setup. What type of trade is this? Is this a counter trend? Is this a continuation trade? Is this a consolidation breakout trade? And then go to your individual tactic, right? Based on the setup that you see, go to your trading plan. All right. Continuation trades. Here's how I approach them. Breakout trades. Here's how I approach them. Make sense, guys? Give me a yeah. Pow. Perfect. Social media people, I'm going to kick you out. Thank you for joining. Subscribe if you're new. Hit that like button. Leave any comments if you want to ask any questions. I'll go through them later. Tier 1 members, we're going to dive in a little bit deeper. We're going to head down to the lower time frames and dig into the situation in a little bit more detail. So let me kick these guys out. Thank you. See you guys tomorrow. Same place. And